That's what makes value investing difficult. You have to make so many assumptions and then wait for the right time. And usually the right time is when everybody else hates it. The mindset of value investing. Investing is 10% of it's about the numbers. Temperament and mindset is everything else. We call ourselves value investors. A lot of people call themselves value investors. I've had crypto enthusiasts call themselves value investors. I've had crypto guys call me and say, hey, Bill Miller is a value investor. If you don't know who Bill Miller is, I think he's a fucking moron. Now, why can I curse on this channel? If you notice, we have no more YouTube ads on our videos because we want to focus on our content and our software, which we know adds a lot of value. There are thousands of people on it. More on that later. Mo, so obviously you're around me. Did you have like a realization, epiphany going, I need to be a value investor?
It was so simple. I think it was just, you're not buying a ticker symbol.
Yeah.
You're buying a piece of a company. And actually one of the funny things is when you explained that you're getting double taxed on dividends.
Yeah.
I look at it and said, oh my God, the company's getting taxed on dividends. Company gets taxed. I don't care.
On their net income.
But I own that.
Yeah.
That's my net income.
Yeah.
That's when I was like, oh, okay.
You're buying a piece of a business.
Buying a piece of a business.
Now, guys, if I have 3 questions I ask whenever I see a company. 1, do I think this company will be around for the foreseeable future? If the answer is yes, I go to the next question. 2, do I think they'll have more revenue and profit in that foreseeable future than they have today? And can I reasonably estimate that amount? Mm-hmm. If the answer is yes, question 3, can I pay a reasonable amount of money today for that future stream of profit that gives me an adequate return on my capital? That's the one you're going to say no to 95% of the time. That's what makes value investing difficult. You have to make so many assumptions and then wait for the right time. And usually the right time is when everybody else hates it. So here's an example. We just did a video on Tesla. 15 months ago, Tesla was at $414 a share. In the last 2 months or 3 months, it was at $101 a share, a drop of over 75%. And in this month of January 2023, it is up over 30%.
That's about 40% as of right now.
Really?
Yeah.
Look at these massive fluctuations, guys. Is that rational? Is it really rational that Tesla's 40% more valuable today than it was 1 month ago?
Not at all.
But what's shifted?
The emotion of the market.
And people's perception of Elon Musk.
Elon Musk, perception of Tesla.
That's it. Yep. So the hard part about being a value investor, and the thing that you're probably looking at going, wait, what? Is can you be different? Everybody in the world thinks they're different. I've always thought I was different. But saying you're different versus being different is very different worlds, speaking of which. There's a great book on value investing called The Education of a Value Investor by Guy Spear.
Great book.
What I loved about it, remember when he was talking about 08 and 09? He's like, all these people I knew that said they were value investors and they were bailing on stocks, they were down 30%. I was like, yep, that's exactly it.
Yeah.
When I hear people talk about, oh, I'm a value, I believe in value. Are you going to believe in value when stocks are down 50 or 60%? So behind me,
or are you going to think they're going to zero and sell everything?
Which is what usually happens. Behind me is my stock market to GDP ratio that I created going back to 1929 on the S&P 500 and its equivalents before it actually came out. It currently says we are 70% overvalued. The average over 10 years, not including dividends, is 6.6% a year. And when you're over 30%, it's a negative number. So I believe we are going to be negative for the next 10 years on the S&P 500 index, not including dividends. Now, here's how bad it is today. The S&P was down 20% last year. In the dot-com bubble, the worst it ever got was 57% overvalued. So we're still overvalued by 13% more than we were at the peak of the dot-com bubble. Think about that. Think about that. Now, in due form, I get messages from people on Instagram, on Twitter, on everything saying, Paul, but don't you think that blah, 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 and they have some excuse for it. Yeah, and they could be right.
Different this time.
And then my comment back is, for you to be correct, it means one thing and one thing only. It's different this time.
Yeah.
And the 4 most dangerous words in the English language are?
It's different this time.
Correct. Well, in investing, it's different this time. So far, if you're new to the channel and you haven't turned us off because you think I'm a moron, if you like this, keep listening. We have over 2,000 videos. You go back to our history and you'll see all the videos in which we said avoid this, 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 and this. All those ones we said avoid, they're down way more than the market's been down.
Guys, I implore you to go back and look at our videos of
We love
Tesla.
accountability.
Go look at Google. Facebook, Alibaba, Netflix. I mean, just go through any stock you want. The only stock that might not be down that we've ever done is maybe Monster Energy, if we've ever done it, and Ulta. That's it.
Yeah.
That's it.
Like, I think I'm up personally on Walgreens and HPQ. Not telling you to go buy it. Don't buy it just because I have it. But we're going to, by the way, value investors are going to lose money. Your stocks are going to go down. Warren Buffett's stocks are down. He's going to go down in this market. But the point is, are you able
and willing to buy more?
To buy more when the market is telling you you're wrong. Yep. But what you care about is the fundamentals of the business. It's funny. There's a value investing comment where people say, only buy a company if you're okay with the market shutting down tomorrow for 10 years. I prefer to buy a company where the market shuts down for 10 years because even I fall for the emotions of the market. I hate seeing my stocks go down.
That's pretty much what you do when you buy a house.
Yeah.
You buy a house and you don't know the value of your house. Say you buy a new house every 10 years. You don't know until you decide to go and look and figure out the value. There's no ticker symbol on top of your house.
If you own your own business,
you don't know.
You have no idea what your business is worth. Here's my point. If you pay a reasonable price for a business today, and 10 years from now, the profit's 10x, what's the value of your business? Probably
10x.
Probably 10x. That's the same thing in the stock market, except in the stock market, every single day, over 10 years, it looks like this, right? But here's what it looks like year to year. Can you be rational when that's happening? And that's the mindset we're teaching on this channel. That's the mindset the thousands of people in our software have. So I talk about our software a lot. And as I said, as you notice, we took off all YouTube ads because we want to focus on our content and our software. So if you're interested in how you become better with mindset and numbers, check out this explanation of our software. The Everything Money community has already helped thousands of people exactly like you to help them understand financials, understand investing, and understand the emotional side of everything to make better decisions for your future and your money. What you get with the software is my 8-pillar process, our stock analyzer tool, which was used over 1.3 million times in 2022, and all the other stock screeners that the Everything Money community of intelligent investors use to find their value plays. These are the exact tools that Mo and I use every single day to find the investments that make the most sense to us. And you also get access to Mo and I and all the thousands of other Everything Money investors, so you don't have to do this alone, because that is the hardest part about investing, is being on your own. Make the choice I made. Invest in yourself for a little over $1 a day to make these decisions easier and smarter as time goes on. Here's the catch. We're not going to give you fish. I'm here to teach you how to fish. If you're looking for a magic bullet, we're not the site for you. We're not the channel for you. If you're looking to become a smarter investor who can find their own process, welcome home. Get started now, risk-free for 30 days at everythingmoney.com. So guys, that software helped a ton of people. I get so many thank yous on Instagram, on our software, saying, Paul, thank you for teaching the mindset, because the mindset and being around like-minded investors is the most important part of value investing. It's super, super important. And it's not going to happen overnight, guys. I was in your position 15 or 20 years ago, and over time, it got better. And that might sound like a long time, but it's not. You'll get better little by little, and you'll be amazed at how many things the hard part about investing is the mindset and temperament of it. Mm-hmm. If it wasn't, then every MIT person in the world would have the best fund. And we only know one good investor from MIT, Gary. Oh, by the way, it made me so mad. I was playing Gary this weekend. I took on chess. I took a rook cleanly. Yeah, she trapped my queen and he won the queen back. I'm an idiot. But either way, this is what investing is all about. It's all about temperament, especially value investing. Now, does that mean you have to be a value investor and try to look for? No. It's also about dollar cost averaging and just staying in and maybe even increasing your investment when stocks are down. Look at this. Is it no coincidence here? The average was 6.6% a year for 10 years. When the market was down, big undervalued, it was 3% higher. The more you pay, the less return. The less you pay, the more return. Look at 1982. The stocks at their all-time low, 64.7% undervalued. 14.1% returns for the next 10 years, not including dividends. It's just logic, guys. And I'm asking you to think a little differently. So if you think differently or know somebody else that thinks differently, subscribe to the channel and share this with a few people, because it'll really change their way of looking at money. And I guarantee If you watch 4 or 5 of our videos, you'll walk away having a better understanding of money, because the more you learn, the less you fear. And that's what makes bad decisions. Fear leads you to bad decisions. Stop having it. Thanks, guys.